Welcome on board. Saurabh Gupta, the CFO at Dixon Technologies, is joining in on the show right now. Saurabh, hi, morning. Good to have you on the show. Tell me about your
Morning.
mobile segment because that's clearly managed to offset the muted performance in other segments, right? So, what's the outlook going forward? And I ask because you've seen strong execution from your customers like Motorola, ramp up of volumes from JioBharat, Nokia. ITIL as well for feature phones and initial smartphone volumes from Xiaomi.
Yeah, so clearly mobile is the largest trigger for our growth, and almost 50% of our revenue contribution in the next financial year should come from mobiles as a vertical. Clearly, we have a very strong order book in this vertical, led by our anchor customers, Motorola, Xiaomi. We have now completely in the phase of ramping it up, and from next financial year, we'll be able to ramp it up further. And we are also in the process of adding some new customers in this category. Production for one of them should happen very soon, and for another customer should happen in the next six months. So clearly, we are looking for a very strong growth in this category. And if you look at the total capacity that we have created in this category is almost 80 million smartphones and feature phones put together. And we are targeting almost 30 to 35% market share in the outsourced market in India in this particular category.
Given that Dixon has been increasing their revenue share of the mobile phone segment at 67% in Q3, what is the outlook in terms of your overall product mix going forward?
Yeah, so as I clearly mentioned, almost 50% plus kind of revenue should come from mobile as a vertical, followed by consumer electronics. But clearly, I think so. Next couple of years, we think IT hardware, where we are again a beneficiary under the PLI scheme, will also start contributing a large share in our overall revenues. So clearly, these three verticals in terms of revenues should start contributing a large percentage, led more by mobiles as well as IT hardware.
Sense as to what the company's plan is to foray into screen displays and mobiles, laptops, and those kind of categories. What's the game plan that you have? How much of the capex have you slated aside for the same?
So those numbers are being worked out, but clearly we see a large opportunity to get into backward integration. So in the last few years, we have added new verticals across our core of electronics, but now we are looking deeply into the various components, critical components, and display is one component which we have narrowed it down. We think there is a big business case to do a component, especially for mobile business, where there is a big arbitrage, and we are working towards it. We're working and hoping to get a partner in place. And yeah, once we finalize, then I'll be in a better position to share some numbers on that.
Give us a sense as to what the outlook is when it comes to your margins, because your margins have contracted in Q3. Do you think that you can get back to that 4% margin mark?
Yes, the margin profile will be somewhere around 4 odd percent. See, clearly the margin drivers for us is the operating leverage across verticals. In some of the verticals, it has already kicked in. In some of the verticals, it will kick in as the scale improves. Then increasingly focus on our own design solutions and also more focus on backward integration. So these are the margin positives, margin drivers. But still, a significant part of our growth is still coming from mobiles and IT hardware, which are relatively low gross margin and low EBITDA margin businesses. So my sense is combination of both put together. I think so margin profile in this category should be around the similar levels of 3.94 odd percent. But what we are confident as a company is that our ROC profile, which has already seen an improvement in Q3 numbers, should continue to go up because of better overall improvement in earnings, working capital efficiency, as well as higher asset turns in mobile and IT hardware business.
What about the addition to the top line that you're expecting, in FY 25, 26, and especially, with regards to the Lenovo contract for IT hardware, PLI, as well as, the PLI 2.0 scheme?
Yes, clearly we are looking for a very strong growth. If you look at this year also, we will have a very strong growth as compared to last financial year. And clearly, I think so we should grow at a similar number, kind of a growth for next financial year as well. And IT hardware, I think so there'll be always some time to ramp up. So my sense is it will take another 5, 6 months for us to start manufacturing for an anchor customer, the name that you mentioned. But definitely FY 25, 26 will be a large year for us as far as IT hardware is concerned, because clearly, apart from the customer that you mentioned, we are also looking at more customer additions in that category. And secondly, I think so we have a very strong order book in mobiles as a mobile vertical.
When is the new facility in Dehradun for home appliances expected to commence, and what sort of synergies you see coming in from there?
Yeah, huge synergy. So clearly, that is a large facility that we have taken. So we'll consolidate our operations across various plants that we had. So clearly, that would have a positive impact on our margins. So that facility has already started in February, and yeah, so we are in that particular vertical. If you look at the numbers in the last 1 year, clearly we have improved our margins. We have improved our ROCs in that business, and that business continues to have a strong order book. We have been able to take higher share of wallet from our existing customers, and also we have been able to add new customers in that category.
Thank you for sharing with us that outlook. That's the word from the management of Dixon Technologies. IT hardware ramp up will take a few months, 5 to 6 months. Margin profile around 4% and 30 to 35% market share in the outsourced mobile market.